So, today's concept that I would love you to really understand is about interest rates. Interest rates actually hold the key to why investing is such a powerful tool and why anybody in the personal finance world that is talking to you about building wealth is going to be talking to you about the opportunity of investing. So, I'm just going to keep this really simple each day this week, but interest rates on transaction accounts. So, this is your everyday account that your bills and things are getting paid from. It's usually the account that your pay is coming into. Transaction accounts pay virtually no interest. And the reason for that is because that money is completely at call. Banks are not going to reward you by paying you interest on a transaction account. Now let's look at savings accounts. Your everyday savings account is going to be paying a better rate of interest than zero, but it is going to be sitting reasonably close to the cash rate or just below. So it is better than zero, but it's not fantastic. If we then were to look at a high interest savings account, this is usually the type of account that has some kind of condition on it. They want you to be saving more. They want you to be taking less money out of it. And if you meet those bonus conditions on a monthly basis, you might expect to receive something like that 4% to maybe even 4.5%, depending on the cash rate in your country. Now, the relationship between risk and reward is something that we're going to look at understanding on another one of the days this week. But when we flip over to investing, where there is higher risk, all of those transaction savings accounts that we've talked about are very low risk because the bank has to give you your money back if you want it, when you want it. When it comes to investing, of course, there is a lot more risk involved. If we were to look at the type of investment, which is called a money index fund or a mutual fund, those types of investments can return between 8 to 10% over a long period of time. Not only that, but that interest is compounded. That compound interest, because it is so high and because it is compounding more regularly, that is where the power of the stock market lies. So, when you are thinking about building wealth over the longer term, that is where investing needs to start to become a part of something that you are actively considering whether this is the right thing for you. All right. Thanks for tuning in.